Yo, what up, everybody? Mark Jenkins, a trusted realtor. And man, listen, I gotta let you know, I really don't like making these videos, especially these types of videos. A lot of people online, they like to talk about this stuff as if it's like not really affecting people or affecting people's wealth and things like that. But, it's a necessary thing that has to happen. The public must be educated and they must know what's going on, because there's been this sentiment that although people aren't really buying houses, like the story has been inventory is just way too low for the housing market to change or prices to start coming down. And I've got data, unfortunately, that might point to the fact that the party is over for sellers. It really might be over for sellers. The last couple of years where you were able to just list your property for whatever you wanted and get tons of buyers to come in, take a look, make an offer over asking price. I really think that this fall we're going to start to see things shift more so towards a buyer's market. Now, traditionally, a buyer's market is considered having 5-6 months worth of inventory. And yeah, traditionally that would be a buyer's market. But what I'm about to show you is that we're kind of already approaching a buyer's market based on the numbers, although we don't have anywhere near 5 to 6 months worth of inventory. I think that the numbers show that the buyers are definitely gaining control of this market. So if you are interested in learning more about real estate, and that's whether you're a buyer or a seller, first-time home buyer, first-time home seller, listen, you're gonna need to know the information that is pertinent to you so you can make the right decision. So maybe you can find a deal. And that is what we do here. Every day, Monday through Friday, we have our Ask a Realtor broadcast where we're making live calls with homeowners and home buyers, educating them about what's going on in the market and, of course, taking on clients. So if you have the time and you're available, please be sure to tune in to Ask a Realtor starting at 8:45 Monday through Friday. You're going to learn a lot. You have the opportunity to be able to call in, ask questions. There's a ton of information and a ton of things that you can gain from just sitting back and listening to hearing what other homeowners, other Americans, other buyers are doing with their real estate plans. Now, of course, if you like true real estate information based on the data, then be sure to like this video so we can get it out to as many people as possible. You all know that if you're watching this video, especially, sure you all understand that the mainstream media is not going to give people the information that they really need to make an informed decision. And even if they do give you a little bit of information, they're never going to show you the numbers or break down the numbers the way that I am going to today. So if you appreciate the information, if you appreciate the analysis that we're about to go through, please be sure, like this video, give it a nice thumbs up. More importantly, comment below. Do you agree with my sentiment on the market based on the data? Do you disagree? What are your thoughts along there? And what are your plans for the next year, months, half a decade? What are your plans and what are you looking at real estate? Because believe it or not, this is something that is very, very serious. And it's almost like overnight, everybody flips saying, there's not going to be a housing crash. And listen, I'm not saying that there will be or that there won't be. What I am saying for sure is that the numbers definitely are pointing to there's trouble coming for sellers. So we're gonna go ahead and jump into these numbers. Like this video, share this video, comment below. Let me know that you appreciate this information. I'm gonna put it out there anyway, but by at least giving me some feedback, you're letting me know that it is reaching somebody. Like as long as I can reach one family, from this video and be able to keep them from or help them make the right decision when it comes to their purchase, I'm satisfied with that. We're not monetized over here yet, working very hard to get there. But at the end of the day, it's only going to come if we're providing the right information. So give me some feedback. Let me know exactly what you think. Now, we're going to jump into the MLS and take a look at these numbers. All right. And for those of you who are wondering, no, these are not going to be national numbers that we're taking a look at. All right. I do have the national numbers, but it is a lot more to sort through. This analysis that we're doing, it does take time. All right. So, not national numbers. We are specifically going to be looking at what I call the original Metro Atlanta 6. Fulton County, Cobb County, Clayton County, Gwinnett County, Cobb County, Henry County. 1, 2, 3, 4, 5, 6. The original Metro Atlanta 6. All right. Now, we are not looking at new construction numbers here. Okay. So I know that you see a ton of new construction going on. You see all of the building. You see people closing on new construction. We are not including new construction. One thing that a lot of people don't know about new construction is that new construction has already cut their prices significantly, sometimes $30,000 or $40,000. Now you don't see it as a consumer on the front end because you're looking at the prices like, hey, it doesn't look like anybody cut these prices. But on the back end, when they're adding in thousands of dollars worth of closing costs, when they are adding in rate buy downs, like there are companies out there that will buy your rate down to near 5%. That costs money up front. And if the buyer isn't paying it, that means that the seller is paying it, and it's essentially a discount. All right. It's affecting their bottom line, and it's a discount. So we're not talking about new construction. We're not talking about homes that are under construction. We are simply only looking at resale homes because the majority of homes on the market, the majority of transactions that are going to take place are going to be resale homes. Those are people who want to cash out on their equity, make extra money on their property, or maybe they just have to move, right? So we're only looking at resale. So let's go ahead and jump into it. Take a look at the numbers so you can really understand exactly what's going on here. All right. So when it comes to real estate and the prices, and I'm going to blow this up a little bit, right? When it comes to real estate and prices, you know, the number one thing that matters and the reason why they're trying to sell you that, you know, the market is not going to change is mainly because of inventory. And as you can see in this category right here, new listings, yes, we are having a decline in inventory essentially every single month. These are year-over-year statistics. Every single month this year, inventory, or should I say, new listings, new homeowners listing their homes on the market in that particular month has dropped significantly every single month. All right. So one thing I want to point out is that for these new listings, you're always hovering, well, not always, but the lowest is about 2,800. Highest is $4,000. So, and most of the months have been over 3. All right. So you're seeing at least on average 30, 31, 33, 3,400 homes hitting the market every single month. All right. And I know, I get it. People are saying like, hey, you know, the inventory is extra low, and it is lower than last year. The problem with that, and I feel like it is actually coming to a head right now, is that because of the interest rates, there are not enough people buying these homes. So remember in your head, if you can just follow me, about 3,400 homes on average hit the market every single month. Now, let's talk about pending sales. Okay, so we just took a look at new listings, 3,400. Keep that in your mind. 3,400 homes are hitting the market every single month on average for these original 6 counties that we're looking at. Now, if you take a look at pending sales, that's where it starts to get interesting. Because if you look at pending sales, there has never been a month in this entire year where pending sales has exceeded new listings. Okay, so the average for pending sales, see, we got some 2,900s, 329s, 23, 224s, 227s. So you probably can say about 2,700 homes every single month are going under contract. They're going pending, okay? So we've got a difference on average of 800 homes compared to new listings, compared to the amount of homes going under contract. 800. That's a pretty big gap. So first and foremost, what that's telling me and what it should tell you is that there are more homes coming to the market that people are actually willing to buy. More homes coming to the market than people are willing to buy. More supply coming to the market every single month, but there's not enough demand to take that supply off the market every month. And that's just pending sales. If you look at closed sales, which is actually a more definitive number of what actually took place in any given month, scroll down here and we go to closed sales. And closed sales are even worse because here, the closed sales average, they've got one for 1,500, which is terrible. But you can see that the closed sale numbers, like we were talking about 2,600 homes going under contract on average. For closed sales, it's probably about the same, maybe a little bit less than 2,600, but it's the same thing, right? There are more homes coming to the market every single month than those that are actually selling, those that are actually going under contract. And so what does that mean in terms of active listings, right? As you can see, for the first 4 months of this year, we had an increase in active listings available. So homes were not selling and they're piling up right now before your eyes. So in August, right now, or last month, if you will, right, there are 8,400 homes active. 8,400 homes that are active. However, you've only got 2,400 that are going under contract. That's a massive difference. You're talking about 5,600 homes left over compared to what was available and active in August to what went under contract in August. 5,600. So that's telling you that we have I'm not gonna say we, because I sold my home last year. Sellers are going to have a huge problem when it comes to getting the price that they want, because just mathematically, there are much more homes available than the ones that are going under contract. So this whole time, the news and everything is telling you that home prices can't go down because there's limited inventory. Well, I'm showing you right here that that's not the case. There are 3 times as much homes available than what's going under contract. Isn't that amazing? Now, of course, it doesn't take a rocket scientist to know that interest rates are the main reason that that's happening, right? But here's the other side of it. There are sellers out there that also are not selling because of the interest rates as well. So whenever that block of sellers decides to start selling those properties, you're going to have even more inventory. And it is my personal opinion, that housing affordability is not going to return to the market for a couple of years. And when you combine all of those together, what you have is a situation of there's a lot more people that want to sell than buy. There's a lot more people that want to sell than buy. The numbers are showing you that by the amount of new homes that are coming on the market and the amount of homes that are coming off the market. The numbers are showing you with the amount of active listings and with the amount of closed sales, right? Showing you right here in black and white that there are much more people that want to sell their properties than people that want to buy. That goes totally against what the mainstream media has been telling everybody. Because they've been telling everybody that, hey, there is no inventory. There's no inventory. Home prices are going to keep going up. We're going to take a look at home prices in a second. But what does that mean? Well, obviously, what that means is that home sales prices, homes are going to take longer to sell. But before we get to that, really quickly, average sales price. The first 5 months of this year, average sales price actually went down. Did anybody tell you that? Of course not. The first 5 months of this year, home sales prices went down. Okay? And you might as well say we haven't really had any month that home sales prices actually went up its normal rate, except for August. Home prices in August, year over year, were up 4.7%. The average is about 4.5%. So we had 1 month out of 8 months so far that we have data for that shows that home prices actually went up at a normal level. The rest of the months, you can pretty much consider those a loss, because if your home value goes up 0.5%, the average for your home to go up should match inflation. We all know that inflation is not even 4.7%. Last time I checked, it's higher than that. So technically, every single month, every single one of these is pretty much a loss. We're not going to call August a loss, because it got 4.7%. Now, active listings, we've talked about that. You know that those are creeping up. All right. And they've been creeping up for quite some time. If you look at the end of 2022, right? At the end of 2022, people really started trying to dump these homes. It's weird that, or I should say, looks like an anomaly during the selling season, March, April, May, June, there were actually less homes available on the market because those interest rates were still creeping up than there were in the fall months, September, October. In fact, there wasn't 1 month from August to November on average that was lower than the rest of the year. Okay? Active listings creeping up. People are not taking these homes off the market. And what does that mean? Well, that means that average days on the market is also going to increase, which is another thing that is going to point to sellers having to cut these prices. Because what does a seller do when the home has been on the market? Long time, longer than expected, right? Obviously, they want to entice somebody to come get the home. How do you entice somebody to come get the home, especially in a high interest rate environment? You're gonna have to start cutting these prices, okay? Like, look at this. In January, we had 3, we're gonna include March as well too. 1, 2, 3, 4 months this year where homes took double the amount of time to sell compared to last year. Double the amount of time. And we've had pretty much 3 straight months of increasing. It'll be increasing days on the market, right? Last year, we didn't have, what? Last year we didn't have 1 month above 30 days until August last year. This year, we haven't had anything below 30 days. And if this trend continues like it did last year with September, October, November, and December, if this trend continues, nothing's going to sell this fall. Well, I'm not going to say that, but if this trend continues, it's going to take a very, very long time for homes to sell this fall. Because, when we had 38 and 42 days, right? These were the highest numbers of the last year. 30, 38, 42, and 48. Those were the highest numbers outside of December in terms of average days on market. And we've hit that number 3 times already. We hit it in January, February, March, and then August was also 36. So we've hit that number quite a bit. Now, let's take a quick look at some other numbers. If you don't believe what I'm saying, comment below. Tell me. I'll debate anybody on this. I don't want to be right. I don't want people to lose money. I don't want people to have to cut these prices by 20 and 30 grand. But I'm not the person that's in control. So let's take a look at the median sales price. All right. Those of y'all have been following me. You guys know that I made a video in 2020 about the housing market beginning its crash in 2022. And till this date, I stand on what I said and the numbers back me up, because the peak of the housing market here, June of 2022, we have not exceeded that number. We dipped down and we got real close. We got really close to it, right? June of 22, median home price was $395K. And then right back at June 2023, the median home price was also $395K. For those of you who are familiar with investing, that's called a double top. Okay? And just so you can know, I'll read you the definition of a double top in investing. Just so you can understand, just so you know, like, I'm not making this stuff up. All right, a double top is that extremely bearish, which means that going down, right? Going down, extremely bearish technical reversal pattern that forms after an asset reaches a high price 2 consecutive times with a moderate decline between the 2 highs. Now, let's take a look. 2 consecutive times here and here also just happens to be the same month. June of 22, June of 2023. Double top, $395 median home price, moderate decline in the middle. For those people who are in the back of the classroom, and say it one more time, a double top is an extremely bearish technical reversal pattern. Reversal, which means that it's gonna go in the other direction. That forms after an asset reaches a high price 2 consecutive times with a moderate decline between the 2 highs. Okay? It is confirmed once the asset price falls below a support level equal to the low between the 2 prior highs. Now, when might that happen? Okay? All right. So the low was January of 350. If by January 2024, the median home price dips below 350, you're going to see this thing turn around a lot faster than you would expect it. Now, are we going to go to the floor? No, that's not what I'm saying. Right? Real estate is always going to go up over the long term, right? But you don't live for the long term. Nobody lives for the long term. People are trying to pay their bills right now. People don't want to take a $30,000, $40,000 loss right now, which is what happened last year in the median home price from June to January. It dropped $45,000. Sprang back up on seasonality. New year, people want to get out there and go buy homes. Good for them. Right back up to that double top. For those of you who say the housing market won't crash, why weren't we able to exceed 395 on the median price? Why didn't we make a higher high? Okay? And so that is just a small piece of data which has huge implications. Now, if we look at the amount of residential units sold, right? Same thing, right? Double top. July 2020, high, 10,273 homes sold, right? What do we have? Moderate decrease, another consecutive high, 10,213. Now, according to the definition of a double top, which I just read to you, it says that if the amount of units sold fell below 6161 was the low between the two tops, then yes, there's going to be a full reversal. And what did you see happen? January 2022, homes fell beneath that. And you see, if you could like draw a line here, you see that there is probably no chance that I'm not gonna say ever. There's no chance that we're gonna get back to that 10,000 homes sold in a month. Really, anytime soon. So where are people getting it mixed up at? Where are people getting it mixed up at, thinking that home prices are gonna go up indefinitely? Long term, yes. Over the next 100 years, sure. I buy my daughter a house right now, she'll have plenty of equity by the time she turns 25 or 18 or even before that. But over the next couple of years, those of you who want to sell your house, you're going to be in for a rude awakening. Unless your house is priced properly, I'm not even going to say that. Unless your house is priced at a deal, you're not going to sell it. Not for the price you want, not in the time frame that you want. And like, this is just something that I was, just looking at, just finishing up my day here. I didn't even plan to go live to talk about this. All right. Same thing here. All right. Here we go. Got a double top again. All right. This is residential units sold year over year. Okay. Same thing. Right. Y'all get the picture. And then active residential listings. Here we have a double bottom, right? So just the same thing, the same strategy, right? You bottom out in April 2021, 69, 64. Here we go again, 6,700. Not the exact numbers, but visually you can see that that's a double bottom. Same thing. Double top, double bottom mean the same thing. If you have two consecutive highs, or in this case, two consecutive lows, and then you break what's called the support of the high in between them, it's a reversal. Now, you had the double bottom here. Now, what was the high? Active inventory, the high was 9,800. We broke that in June of 2022, and we haven't been below it since. What does that tell you? It tells you that home inventory is going to keep increasing. It tells you that the amount of homes sold, right, are going to most likely keep decreasing. So we're getting more homes for sale, less homes that are going to be purchased. And then because of all of that, you're going to start seeing prices drop. And if we see prices drop below $350,000, median prices drop below $350,000 by January, it's over. Short term. How short? It's anyone's guess. But right now, with the way that the rates are, if that falls below, if that median home sales price falls below $350,000, you're going to see things change up massively. So just wanted to make a quick video and reinforce where I am with it, all right? There are a ton of realtors out here that do not know this information. There are a ton of realtors out here that don't even know how to get to this page in the MLS. In Georgia MLS, I've seen them personally. They don't know this information. Okay? Now I know it isn't the I know I guess being a nerd is not what people want. When people choose a realtor, you want that girl on TikTok who's making dumb videos and showing houses, and you're gonna trust that person and spend $600,000. I get it. That's your business. Like I said before when we started this stream, if I can just reach one family and help them make the right decision, whether they're buying or selling, I'm okay with that. I understand that in today's market, especially here in Atlanta, you all like smoke and mirrors. You don't care about getting the right information. You don't care about working with someone who is going to prove what they can do for you. You just care about popularity contests. And I respect it, but I can't agree with it. So comment below, let me know what you think. Do you think I'm wrong? I know I'm not wrong, but do you think I'm wrong? And if you do, please comment below, reinforce what you're saying, and let's talk about it. Other than that, I will see you all tomorrow morning, 8:45 a.m. sharp for Ask a Realtor episode number 3. Tomorrow, we are going to be covering the subject to scam. Another thing that you people just keep falling for because you're not doing your research and you all are more interested in the sizzle than the steak. Style over substance. That's what you all want. And I guarantee you, it's not going to end pretty for a lot of people who maneuver like that. A trusted realtor